Hello everybody, it's June 20th, 2022. We're going to take a look at the Bitcoin chart. Before we do that, we're going to look at what I said on Friday when I did the last public video. So at the time, Friday video was right around here. We were hanging out around 20 and a half, give or take. And at that point I said we've got two possibilities. We might be making a larger corrective pattern back into the 22 to 24 area before heading down to the 17 to 18 area, or we might be making an ending diagonal down more immediately into that area. And if it broke 20.1, that becomes the primary. It was unlikely at the time that the bottom was already in. Obviously, it was not. So this all played out. And as you know, this second option here is what actually happened. Regardless, during that video I said the macro view we're very likely at a major bottom, and this is a phenomenal buying opportunity for the longer run. So nothing has changed as far as that goes. So let's take a look here and see where we were, where we are, and where we're going. So this is where we were, right around here on that Friday video. I had this green support box right here in that 17.8 to 18.8 region, and you can see Bitcoin exceeded it just slightly. It went down to about 17.6 instead of 17.8, so that's pretty darn close as far as that target goes. And then as I was looking out at the rest of the weekend, I had this diagonal drawn on here. Well, actually I think I had that diagonal drawn on there on Friday, and we were kind of looking for this to be potentially wave 1, 2, 3, 4, and then a fifth wave down even from there. However, since that point, since that Saturday dump, where, by the way, I bought a whole crap load of Bitcoin, since that Saturday dump, we've seen a pretty decent recovery, and we may in fact be working on 5 waves since then. We saw a breakout of the diagonal, which is a good sign, and we're working on 5 waves, which if we complete them is going to be a very good sign that the bottom may already be in. So let's just zoom in here a little bit and take a peek at what has happened since that Saturday dump. I'm just going to get rid of that. All right. So we have a semi-decent first wave right here, second wave right here. This third wave, if you zoom in on the micro, you can make out a little micro 1, 2, 3, 4, 5. It's not the cleanest in the world, so I'm a little hesitant on this. And to be perfectly honest, this could certainly still prove to be just 3 waves at some point here. So I'm not completely convinced the bottom is in yet, but we do have the potential set up right now, and so far we're holding 4th wave support, which is going to be this green box that I have drawn right here, basically between 19.7 and 20,150. Basically, that's our support zone. It sort of looked like we were gonna make a more direct move. We saw support here, and then it was working its way up, but obviously dipping back down. This now looks like an expanded flat ABC in the best case. And so basically, as long as we kind of stay in this zone and then push up higher, this is all we need to get. That's the 5th wave target right there. All we need is to see 21.5 to 22K. If we can do that before invalidation of the impulse, and that invalidation comes at this red line, 19.3. If we can get here before we break 19.3, there is a very good chance that the bottom is already in, and from this point we will see a pullback. Most likely we'll see a pullback, but we should see a higher low pullback. This will make a higher low in comparison to that 17.6 low, and that is going to be a very, very good buying opportunity once again, potentially even leverage long opportunity before the next leg up. Now, alternatively, if we do not achieve this, there are a couple options. The first option, which I really don't like, is that this is maybe a truncated fifth wave. I don't like that because, number one, I don't trust it when fifth waves truncate, especially starting off. Like if we're at the end of a bull run and the fifth wave truncates at the end, that makes sense. You know, the tide is about to turn, right? But we are at the end of a massive correction off of a $69,000 high all the way back here. We've been working our way down, so having a truncated fifth wave in the initial micro move off the lows doesn't make sense, right? We are so oversold here that you would really expect this to give a very strong bounce and at a minimum hit that fifth wave target, at a minimum, if not exceed it, right? Extension would be more likely because of how oversold we've become. So I don't like that as a strong possibility that the fifth wave is truncated, so I am waiting for this fifth wave to get up here. But just keep it in mind, it is a possibility. We truncated there, maybe we're going to get an ABC down, and then we start shooting up from there. If we see this target heavily exceeded, you know, in the next leg, then I'm going to have to view this as already being wave 5, and then this is wave, you know, the larger degree wave 1, larger degree wave 2, and then we start moving into the third wave from there. It's a possibility, but I don't view it as highly likely. Okay, the other way that we can view this if we do not achieve this target and we break below 19.3 is that this is simply convoluted, but simply a three-wave move, W, X, Y, and then we're still getting a lower low, right? So basically, if we break 19.3 and we do not get this high first, the likelihood is that we will get a new low. All right. It would have made a lot more sense for that new low to happen within this diagonal pattern. However, I think that's probably a good sign that the bulls really, you know, took control here pretty strongly. Bulls took control off of that low and pushed it beyond that diagonal pattern. So the next low, instead of being, you know, all the way down here potentially, is hopefully just going to be a slightly lower low or even a double bottom. We could certainly see a double bottom happen right there if 19.3 breaks. So the tough thing is, you know, if we're in a diagonal structure, at least we have an idea of where exactly that's potentially going to go. You know, the fifth wave often equals the first wave, so we would have been able to say, you know, here's our first wave down, that's where our fourth wave ended, so, you know, there's our target right there. But lacking that, we don't really have the ability to do that unless maybe, you know, maybe that shoots us to our double bottom. You know, we say, all right, this is kind of breaking down from here. That kind of gives us that double bottom target. So maybe, I don't know. I don't have a good target for where this is going to go for that final wave. If we break below 19.3, I just know it's likely to go at least equal to that and probably a little bit lower. Now, my preference, of course, is that we achieve this fifth wave because I really don't want to see it go below 15.7. Below 15.7, the larger impulse is invalidated, and that makes getting to 100K or higher very unlikely. If we break 15.7, we can, in fact, see acceleration to the downside. At that point, there should still be bounces along the way in order to get out of buys, you know, bear market rallies, but basically below 15.7, and we may in fact be in a very extended bear market. I don't view that as highly likely right now, though. I think it's much, much more likely that we are bottoming right now, you know, maybe already bottomed, maybe one nominally lower low, and then we go up to those 100K targets, but we will just have to see how the rest of this plays out and go from there. So to put it quite simply, 21.5 to 22K is what we need to see before we break 19.3. And then once we get that fifth wave, assuming we do, All we're going to need to do is draw a fib, wherever it actually tops out, we'll draw a fib up. And then we're just going to target basically the 382 to the 618 region. So like 19 to 20K is going to look like a really, really good solid buying opportunity right there, because typically that second wave is going to come down somewhere between the 382 and the 618. It's possible that it comes down a little bit lower than that. We can come to the 764 or at the extreme the 886, although I'd hate to see that. But in any case, buying after this next high, assuming we get it, is quite a solid risk reward proposition. That'll give us a micro 1-2 then. So that would be 1, 2, and that'll start projecting us upwards. This would set us off to really prove the bottom is in, right? We need to continue seeing proof of the bottom. It needs to keep tracking. So 1, 2, 3, 4, and 5, basically we need to see a move. With this, assuming this plays out similarly to this, we're probably going to see a 5-wave move up closer to 30K, and then a major second wave, or more major second wave, and that again is going to be a good opportunity to buy, and that would be very high confidence at that point, right? So high confidence if we fill in these 5 waves, really high confidence if we hold that second wave there, and then if we get all 5 of these waves to fill in, incredibly high confidence, darn near as 100% as you can get, that we are in fact entering a new bull market if this fills in. So that's what we're going to be waiting for, watching for, preparing for as the coming weeks progress. All right, I think that sums up everything on Bitcoin. So hope you guys found that helpful. Make sure you check out the suggested video here. It's from last Monday, and I think it's going to be helpful showing the larger picture. I go over that there. And make sure you hit the subscribe button as well, please, and hit the like button for me. All right. Have a good night.